Hello and welcome to the podcast hosted by myself, Louis Kessinger, and my dad, Tommy. We are a part of the Kessinger Lee Group at Baird and have been serving investors in our area for 4 generations. Our goal is to start a conversation around topics within the world of finance and to educate you, our listeners. All right, this episode is a little bit different than the ones that we've done before. We are starting a series that we're going to at least start by calling The History of the Kessinger Lee Group, for lack of a better title. But I am sitting here as a 4th-generation advisor in a family practice, and I think that is a really important part of our team's story. Mm-hmm. We are a family practice, and there have been 4 generations so far. So you're the 3rd.
Right.
And, do you want to tell us a little bit about where this all started?
Yeah, actually, thank you. So post-World War II, TBK Sr. came back from the war. Mm-hmm. Wanted to try out and be an attorney like his older brother, who did go into law. He spent about, I think he said 1 semester in law school, and it was a lot of reading, and decided he didn't like that. And so he actually went to work for a local stock exchange firm that was put together by a group of local businessmen, Mr. Holton. So he went to work as an apprentice, really, for Mr. Holton. He was 23 years old, coming fresh off of a job from the Parks and Rec. He was working for the Parks and Recreation Department of Lexington, Kentucky. And Mr. Holton had a firm, and they had a seat on what's called the Midwest Stock Exchange, and this is 1948.
Yeah.
So he apprentices with Mr. Holton for a full year, and in 1949, he and one of his new buddies, Mr. Babbage, create the stock brokerage firm of Babbage and Kessinger in 1949.
Yeah.
So that means our roots go back approximately 77 years.
Yeah.
And crazy enough, some of the families that he started helping back then are still families we deal with today. So we're dealing with 4th and 5th generation.
Yeah,
clients.
just had a 5th generation get born this year.
Yes,
so
that's exactly right.
Pretty cool. So obviously, or maybe not so obviously, but we don't work for Babbage and Kessinger today.
So Babbage and Kessinger went along actually for 9 years. So they opened their doors in 1949, and they lasted as a partnership together through almost 1958. Now, this is really important and hard for those of us in today's world to sort of imagine. Mm-hmm. In order to buy and sell stocks post-World War II. So you're post-World War II, you're post the Great Depression. Mm-hmm. You are all these regulations have come out of the Great Depression. The Securities and Exchange Act of 1933, the Securities and Exchange Act of 1934, the Investment Advisors Act of 1940. All of this is coming in, and you're in a heavily regulated business, and you have to have a seat on an exchange. Now, what's really foreign for a lot of people is how many exchanges were out there. So Cincinnati had an exchange. Yeah. Chicago had its own exchange. Many people might remember the American Stock Exchange. Chicago morphed into the American Stock Exchange.
And to put in perspective a little bit, just because the younger generation, my generation, may be saying, what is an exchange? Truly, right?
Okay.
I mean, in the world of apps where you can log in and trade whatever. For instance, there is the New York Stock Exchange that may be the one that people are most familiar with, where you could go
the oldest,
ring the bell,
granddaddy of them all.
So you see it every morning at 9:30 and every afternoon at 4 o'clock. So that is an exchange and the oldest and the biggest. So that's sort of what we're talking about here. Those used to be segmented and all across the country.
They were regional. San Francisco had an exchange. Those were super important. in 1949 to 1958, during that time period, the business was regulated by the government. There was a regulation on how much commission was going to be charged to a client, and or how much commission a client was going to pay.
Yeah.
So you didn't get to decide, and there were no zero trades. I mean, there was a schedule, but the only way to own stocks was to go to a broker, and that broker had to be on a member of an exchange, and then they would put an order in, and they had what's called a specialist on that exchange who would, so if you wanted to buy IBM, you would call your specialist up in Cincinnati and say, hey, will you go to the post that buys and sells IBM, and almost like buying cattle. Yeah. And I'm not kidding. Like you would go to that post and say, hey, I've got a client that wants to buy 100 shares of IBM. And he might say, well, I got 50 for sale at X price.
Yeah.
And so it was this long, tedious process.
And that's where the commissions came from, because you quite literally were paying for access. You were paying for the ability to even be able to purchase.
Correct. So 1949 to 1958, Babbage and Kessinger are part of this Midwest exchange. You could get a lot of the stocks you wanted, especially local ones, local utilities, local banks, but big companies like an IBM, a General Electric, Procter and Gamble. Those were traded on the New York Stock Exchange, the granddaddy of them all. So fast forward to 1958, JJB Hilliard and Sons is a firm out of Louisville, and JJB Hilliard and Sons had a coveted seat on the New York Stock Exchange. So to be able to take your little firm and affiliate, there were no buyouts in 1950. You would affiliate with a firm like a JJB Hilliard and Sons who had a seat on the New York Stock Exchange was a big deal.
And at that time, too, a seat, it wasn't just something that you happened into. A seat on the New York Stock Exchange
cost a lot of money.
Cost a lot of money.
Hundreds of thousands, what would be millions today. They don't do it that way anymore.
It's completely different. But that shows you how hard it was and, what you were paying for.
Correct. So JJB Hilliard and Sons, Babbage and Kessinger affiliate with JJB Hilliard and Sons in 58. Then fast forward to 1962, and two Louisville firms merged, JJB Hilliard and WL Lyons. And so you had two regional firms that merged together, and hence from that point on, 1962 until 2019, Hilliard Lyons, which traced its roots to 1854 as a river trading. They traded commodities and all kinds of cotton and corn, tobacco in this part of the world,
Big
coal,
time.
a lot of coal, hemp, and so. Hilliard Lyons comes to Lexington, Kentucky with TBK Sr. and Matt Clifton and Bob Pollard. These guys come together. They create this triumvirate. Matt Clifton came from WL Lyons, and it was just great. And I have such fond memories of these guys. And they basically ran the firm until 1990. But my father actually joined, so that second generation came on board. 1976 to 1986 was his, maybe 1975 to 86, somewhere in that
mid-70s to mid-80s,
mid-70s, mid-80s. If you're studying market history, that was not a great time to tone stocks. They call it,
lots of inflation.
Lots of inflation. There's a famous cover of Time magazine, The Death of Equities. Inflation was killing stocks, interest rates. They had to jack the rates all the way
Lines
up
at the gas pump
to kill. Just everything that could go
it was
wrong.
Brutal.
Went wrong.
So I hear.
For my dad in this business, and yet he loved it. And the tax codes were completely different back then. They did limited partnerships of coal barges. They did limited partnerships of houses, of new technologies. But the thing that took him out of this business were limited partnerships on thoroughbred racehorses. Well, guess where we live? The thoroughbred race capital of the world. My father's high school, one of his high school buddies was Shug McGahee, Hall of Fame thoroughbred trainer. Yeah. So my dad did these partnerships and really got into the horse world and decided, somewhere in 84, 85, that he was going to morph from a stockbroker to a horse trainer. And ironically, it is this stock brokerage lineage, ironically, that led him to the thoroughbred side. And so you just never know where things are going to lead. So he exits circa 1986, and goes and trains horses for the next 20 years, and has a great career. Meanwhile, my grandfather is still in management. By 1949, starting their own firm. 1986, his son leaves. He's got no real sort of.
And you're at Tate's Creek playing football
and cleaning the office. I was the janitor. And I got the manager of the office, TBK Sr. Nepotism, gave his grandson a great job of taking out the trash, cleaning the
mopping the
floor, cleaning the ashtrays. My job was to make sure ashtrays are clean, coffee is ready. All they got to do is click on to get the pot brewing, because they got business to do.
Yeah, well,
the next day.
This is also the sort of Mad Men era of business, right? So, the 3 martini lunch is somewhat in effect. And so you've also got to make sure that the glasses are clean.
The
bottles are full.
There's ice in the fridge.
Yeah.
The liquor bottles are dusted, full, ready for the next day's business. A totally different world.
Totally different.
Than we live in. And that was 35 years ago. That's so a little longer, 86, 40, 39 years ago.
Yeah.
So, he stayed on as the manager of the Hilliard Lyons Lexington office until 1990. He turned 65. There was an unwritten rule. You don't do this anymore, ageism and all these other things. But he was more than happy to relinquish the management roles. But then he could really concentrate on his clients. And, those now at that stage, you're talking about a man that had been in the business for 40 years, 41 years, had deep relationships with his clients and good friends and what have you. But he had no succession. He had no succession in that regard. Meanwhile, I'm the janitor. We moved into a different building in 1991. So my janitor,
for those of you in Lexington, tell the story. Like, so you moved from what building? Where were you downtown? Where'd you move?
Yeah, we moved from what is now the Lockbox.
Yeah, so the 21C
hotel. So our offices were in the Lockbox restaurant. That safe that you see there, that's a cool private dining room. That's where the trash was, by the way, and that's where the news ticker tape was, and so I had to rip that paper off every day. So I get a kick out of walking in there. We moved from there to 106 West Fine, which is now being converted to
multi-use
condominium,
condos, businesses, and a new
restaurant,
social house,
or
restaurant, rooftop pool. So
they had their own janitor. So then I became the office bartender. So any office event, any client entertainment, anything you can think of, Tommy Kessinger III got the call, come be the bartender for the group, and I had a great time. I'm the luckiest guy in the world to be able to have that kind of deal. I ended up getting a degree in accounting from the University of Kentucky circa 1993.
With no immediate thoughts of entering the business.
Oh, I didn't think I was allowed to come into the business. I was told over and over, well, go work somewhere and then come into the business once you meet a bunch of people, because you're going to need to have met people who will do business with you.
Right.
It was a stock brokerage business. It wasn't an advisory type of thing back then.
And in some ways, though, so a totally different operationally, how the business worked, how, you were paid, all kinds of things. Just the way that the office was, the fact that there were cigarettes and liquor bottles, that's completely different operationally. But a lot of similarities that I can appreciate in terms of, you mentioned the word succession. So there you are graduating. You're applying to an accounting firm, right?
Yes.
And so talk a little bit about that and what TBK Sr. said.
Yeah. So the old man, I go to the old man as a sophomore in college, and I say, hey, what should I get my degree? And he said, well, if you get an accounting degree, you'll always have a job. I thought, well, okay, I always want to have a job, so I'll go get an accounting degree. So I get an accounting degree, and at the time at the University of Kentucky, as you're going into your senior year, the big 6 accounting firms from New York would come in and interview all the talent, and you hope to get a job offer.
Yeah.
And there were also some other regional firms, SQ and Gresham, Dean Dorton and Ford, that were around, that were also interviewing and hiring depending upon what their needs were. Well, I got interviewed and got a job offer from Coopers and Lybrand, which is today PricewaterhouseCoopers.
There you go.
And so I was very excited. I got this letter. Hey, you'll get $30,000 a year. You'll get 2 weeks vacation. You'll come in as a junior audit associate. You got to get your CPA. I go to my grandfather's office and I say, you think this is a pretty good offer? I'm thinking about accepting it. He literally looks at me, the same man who told me to get the accounting degree, the same man, and he goes, well, I mean, if you want to push a pencil your whole life. I was like, wait. What do you mean? He goes, look, I'm 67 years old. I really don't have time for you to go out and do that. I'm not getting any younger. I have no succession plan. Won't you come here and learn something? To which I responded, I didn't even know that was an option. So fortunately, I pressed pause on the accounting career, and I interviewed with Hilliard Lyons, based out of Louisville, with a very strong referral. Because I was 23 years old, with basically on my resume, I'd been the janitor, the bartender, I'd worked at a few clothing stores in the mall.
And at that time, right, before we wrap up, right, like, you need to know somebody who has some money that you can sell things to. Well, guess what? The people who who have money that you're going to sell things to, your grandfather's already selling stuff to them.
They're already well taken care of, and they're not going to entrust their money with a 23-year-old with no investment experience whatsoever. But I'm grateful. What an amazing start, and I know we'll get into this next time, but the ability to work with him every single day for the next 15 years is a gift that is pretty amazing.
Yeah. And before we get too emotional, we'll wrap up.
That's good. Thanks.
Chapter 1 there. So there's how we got TBK Sr. and TBK III working together in the same office. So we'll touch on where we go from there next time.
Awesome. Thanks, Lou.
This podcast is intended for informational and educational purposes only. It is not an offer to buy or sell or solicitation of an offer to buy or sell any security or investment or to participate in any particular trading or investment strategy. The information is considered to be from reliable sources, but its accuracy is not guaranteed. We do not offer legal or tax advice, so please consult your tax or legal professional for information specific to your situation. The opinions expressed are those of the speaker and not necessarily those of Robert W. Baird & Company Incorporated. Please note past performance is not indicative of future results, and diversification does not ensure a profit or protect against loss. All investments carry some level of risk, including loss of principal. You should carefully consider investment objectives and risks of any investment before investing. An investment cannot be made directly in an index. Securities and investment advisory services are offered by Robert W. Baird & Company Incorporated, a registered broker-dealer and investment advisor, member NYSE, FINRA, and SIPC. You should consider the investment objectives, risks, charges, and expenses of each money market fund carefully before investing. This and other information is found in the applicable prospectus for the money market fund. Contact your Baird financial advisor for a prospectus. Please read the prospectus carefully before investing. Money market funds are managed to maintain a stable $1 share price. An investment in a money market fund is not insured or guaranteed by the Federal Deposit Insurance Corporation or any other government agency. Although the fund seeks to preserve the value of your investment at $1 per share, it is possible to lose money by investing in the fund.